Hi, it's Richie from HAEST. I recommend you buy Nestle. Nestle is a Switzerland-based food and beverage company. Product-wise, powder and milk products sell the most. Geographically, America, developing markets, is the core. Stock price increases steadily in these 3 years. The whole default scenario considers fate and inconsistent asset growth results in a 10% downside, although Nestle creates economic value for shareholders. It contrasts sharply with other equity research teams and the scenario implied by the market. They believe the fate effect is very slow and Nestle has growth potential. To verify this statement, let's analyze the business model first. The powders have lower sales, higher margins, and a developing market base. It outperformed the industry in these 2 years. The non-powders have stronger sales, lower margins, and a very developed market base. It outperformed the industry as well in these 2 years. In conclusion, fate is very slow as Nestle can cope with competition in sales growth. Nestle should push powder sales growth in developing markets while exploring premium items in developed markets. In my opinion, CFROI drivers can be supported. First off, Nestle has proven margins generating record compared to the peers in the past. Besides, to lift sales growth potential, Nestle acquired Pfizer to enter China baby milk market. It also expanded distribution in Russia. Moreover, it divested its pharmaceutical investment to refinance other projects. To lift margins, it focuses on premium pet care in America. Furthermore, Nestle has strong brand equity from expression projects in developing markets and quality supply from 10 countries. Lastly, growing demand in Indonesia and China shows margins and sales growth opportunities. These effects were proved in 2013 Q1 sales report. Developing market organic sales growth was 6%, while pet care 8% of organic sales growth are capitalized as a large margin growth in America. We can therefore expect a consistent asset growth in developing markets, and Nestle has plans to minimize the effect of fade. Other factors also support the health of Nestle. Operations core in EBITDA growth rate supports sustainability of growth. Current valuation returns to long-term average, but the recovery of returns is not yet realized based on market and book capital regression. Therefore, with margins grow record, sales and asset turns growth potential combined by consistent asset growth anticipation and weak fade effect are projected at 10% upside. To enlarge the upside, I would buy the stock after the market oversells when 50-day SMA crosses below 200-day SMA. Of course, to meet this expectation, I assume Nestle overcomes their weaknesses. It is a long-term investment and a low-beta stock. With proper hedging in commodities, Nestle is a fairly safe investment. Thank you for this opportunity.